Good evening and welcome to ViewPoint, where we bring you the important business and financial stories affecting everyday people and some that are just plain fun. I'm Frances Horodelski. Joining me is Mark Bunting and Andrew Bell. Let's start with you, Andy. What are you bringing the folks tonight?
We're going to be focusing on oil prices because we know this has been a trend for really a decade or more. The big oil majors are finding it harder and harder to pump oil. Prices are going up. We are going to present an expert, though, on the show this evening who has a bearish case, says oil prices are relentlessly headed down towards $90.
And Mark, what are you bringing?
Are Canadians sick of this cold weather? Yes.
I had enough, I think.
Yes,
yeah.
yes. Well, we want some warm weather. And what happens during warm weather? You play a little golf. So we're going to talk about golf and golf equipment.
Okay, well, we're going to bring all of that to you. But first, let's turn our focus to the markets. As usual, it was a wild week in capital markets with a midweek swoon, followed by new highs in the big indices. The biggest event was the Federal Reserve, where Janet Yellen gave a timeline as to when rates would rise. The markets didn't like it at first, and then the markets changed their mind as they realized that was what was expected, and that is a mid-2015 time frame for the first rate hike. Did you think that the markets reacted correctly to her commentary or not, Mark?
It's hard to know. It was a knee-jerk reaction, and then we saw the snapback the next day. But what's interesting is that it seemed as if during that news conference, Yellen made that comment about 6 months, sort of offhandedly, and it's hard to know whether she meant to say it, whether it was a bit of a mistake. And then today we had a couple of Fed presidents talking about that comment, meaning 6 months we'd start raising rates, likely around then, after quantitative easing ends. So two Fed presidents today. One said, yeah, that's pretty well in line with what we're thinking. Another one tried to distance himself. It was Fisher out of Dallas, and he said, well, I'm not putting a time frame on that. So it's still hard to get your finger on it.
Still as fuzzy as ever. But we also had Ukraine and Russia, Andy.
Ukraine and Russia, and I know you and I were relishing this story. It turned out, according to Washington, Mr. Putin, the Russian leader, owns a stake in Gunvor, which is the world's #4 oil trading company. This company trades about 3% of the crude on the planet. Putin has denied up and down that he owns a stake in this. The company irascibly denied it today. But that's fascinating because, of course, the Americans have been targeting Putin himself almost with these sanctions, certainly the billionaires that are closest to him.
And we're seeing more and more sanctions come out from the EU, and we don't know what we'll see over the weekend. But all of this ended up with the markets actually going to almost a new high, but the price of gold off 3% on the week.
Gold fell, but let's keep it in perspective. It got up around, I want to say, 1360 or so, down around 1320, so kind of in a range. It probably needed to pull back a little bit. The big question is this a seasonal thing? Was it a technical bounce from late last year? Or are we going higher? Is the worst over from the last couple of years? And is it better days ahead for some of these companies and gold itself? It's difficult to ascertain at this point, but if nothing else, it's pulling back a little bit.
I mean, sorry, this standoff in Crimea is scary stuff. I mean, it's been called the worst confrontation between Russia and the West since the Cold War, going right back to 1989. So it's amazing gold didn't go up a little bit more. I think
we had a portfolio manager, in fact, this morning who said, in the first time I heard, raise cash because of what's going on in Crimea and Ukraine. But we have a lot of things to look forward to. Next week, we have all of these purchasing manager indices. Those come out Sunday night in China, overnight in Europe, on Monday morning, and then the U.S. one. That's going to determine the direction to some extent of what to look for. But we also get this capital review out of the Fed.
Well, this week we got the stress test. So 29 of 30 banks in the U.S. with assets over $50 billion, they passed. The only one that failed was Zion. But the Zion's. But the most important thing is next week when we find out whether some of these banks, like Bank of America, like Citigroup, and others, whether they can raise dividends, whether they can do share buybacks. And a lot of people are waiting for, say, Bank of America. They've been paying a penny a quarter for a long time. That's nothing. So can they go to 6 or 8 cents? Can they do a share buyback of as much as, say, $7.5 billion? That'll be interesting. And it'll be curious to see how the stocks react if they do. Has that been determined already? And that's in the price of the stock, or will we see them move higher?
And they were higher this past week. But the big granddaddy of earnings releases next week, BlackBerry.
BlackBerry. You got to love the candor of Americans sometimes. John Chen, the new CEO, in that interview earlier this month with the Financial Times says, I think we got about a 50% chance of turning this thing around. Sometimes Americans really amaze you. They'll just come out and say stuff. We're getting earnings from BlackBerry, but it's almost not an earning and subscriber story right now. It's a strategic story. What is the future of this company?
And that will be next Friday, and we will bring that to all of you next week. Up next, though, Andy Bell digs for oil, and it may surprise you just how difficult it is for him to find any. So many headlines at the moment. It seems geopolitical tensions everywhere are causing strain on so many markets, particularly oil. That's where Andy Bell comes in.
Yeah, oil itself, though, is a massive stressor. I mean, we kind of forget. It's like a frog in water slowly being brought to the boil. Oil at $100 is not a normal state of affairs. And in the past, it shoved the economy into a recession. No wonder copper has been dropping. We talked to Eurasia Group this week, though. They are bearish on oil. They say, look, supply has been surging. We think crude worldwide is headed towards $90. Let's have a listen. Thank you very much indeed for joining us today. This week we've seen West Texas trading around $100, slightly short of that. Brent, the world contract trading at around $105, $106. But you're bearish. You think that really over the next few years oil is going to trade global oil prices closer to $90.
Well, yeah, I think when you think out 3 to 5 years from now, the last 3 years we've had a situation where supply capacity growth has outpaced demand growth by roughly 500,000 barrels a day per year. But it's been kind of masked by the disruption events of sanctions against Iran and also what we've had going on in Libya with the civil war and the outages this year. The question for me is just, can you continue to lose volumes that take you off of that track, which should be leading the world toward increased spare capacity? And I think this is probably the year you turn the corner on that, unless there's some sort of negative outcome with the nuclear talks with Iran this summer.
Before we talk about Iran, what about the question, though, that it's getting more and more expensive to find oil around the world, as people like Exxon having great trouble even growing their production?
Absolutely. And I think that's really where, our view on the price floor, when you think out perhaps 5 years from now, that's really underpinned by the need to be able to make decent returns on the marginal barrel. And we see that marginal barrel as largely being the higher end of the cost range for U.S. shale production. You've got very widely varying production costs for U.S. shale production, that go up into the 90s per barrel. And we think prices eventually have to settle into an area that will slow down the growth in output there.
Could we talk briefly about Iran? You mentioned this summer there's going to be a crucial crossroads in the deal on their nuclear program. Tell us what will happen in July.
I think that's really the big market question mark for this year. We think it is slightly more likely that you will see a negotiated agreement on the nuclear issue. That would not involve immediate sanctions relief, but it would probably involve a relaxation of sanctions on oil exports over 12 to 18 months. And what that would do is essentially accelerate the trend toward growing spare capacity and taking away the pressure on the market that those events have created that have kept Saudi production so high. I think also when you look at the other side of that, the 40% scenario where talks fail, you're moving in the opposite direction. You probably have enhanced U.S. sanctions and pressure on Asian importers to reduce volumes much further. And that would be in an environment with sharply increased political tensions as well.
Could we talk briefly about Russia and Ukraine? Obviously, Mr. Putin would really be hurt if the West clamped down on his oil exports, but you think that's unlikely to happen?
Yeah, I think that the Europeans understand that they're very much hardwired into Russian oil exports. And just from a world market perspective also, it's not as if the Saudis or anyone else have enough volume to be able to replace the volumes that would be lost from sanctioning Russia in that way. And so I think the Europeans really believe that they accept the fact that there are constraints on how much pressure they can put on Russia, at least when it comes to reducing oil import volumes.
You know, the Europeans get about 40% of their oil or more from Russia. There's no way they're cutting that off. They just can't. So there's going to be a lot of saber rattling. But when the real money's involved, fossil fuels, you're not going to see much in the way of sanctions.
Andy, we keep hearing about the boom in drilling in the United States, but is a lot of that, a lot of it is shale, but it's not the good quality,
No.
and the decline rates are high.
No, I mean, this is lousy oil. That's the basic reason they haven't gone after it until now. Sure, there's been some advances in technology, but as Greg Priddy of Eurasia pointed out, some of these U.S. shale plays, you can't make money unless oil's at $90. So, you know, observers of the U.S. oil boom, quite a few, even the U.S. government are saying the growth in production, it's going to scale off pretty soon.
And is that not going to put a floor under the price of oil then?
Well, the Saudis can still pump it for $10 or less, but if you get down to $90, you're going to get these uneconomic U.S. producers just dropping off the map.
With all due respect to Jeff Rubin, I'm still waiting for $250 oil.
That's right,
I'm
yeah,
not
that
sure
hasn't
that's
happened.
coming just
Yeah.
yet. But.
Those futures, you lost a little money on those maybe. A lot
Yeah,
of
right.
us did. Thank you very much. Still ahead, we find out how Canada measures up against the rest of the world as a travel destination. Canada is widely known for its top ski destinations and, of course, Anne of Green Gables. But is that enough to attract tourist dollars each year? I wanted to find out the answer to this question and just how we measure up to the rest of the world as a destination of choice for travelers. I spoke with David Goldstein. He's the president and CEO of the Tourism Industry Association of Canada. Thanks, David, for joining us. Let's start with the tourism activity levels in Canada. I understand that we have dropped from 7th to 16th place in terms of overall activity and economic activity in tourism. Why is that?
I'd like to start with the good news, and that the business domestically is doing quite well. In fact, last year in 2013, receipts were up almost 7.2%. Which is about 3 times the rate of the growth of the Canadian economy. So Canadians are traveling within Canada. Where we see the real challenge is our drop in international visitations. So the average over the last 10 years is actually negative 1.7%. The last few years have been much better. But to put in perspective, Francis, the globally, travel has grown by 5% a year for the last few years. And last year in Canada, we only saw a rise of 1.5%. So we're barely getting a third of our fair share of the international travel volume.
In the break, we were talking about you had just come back from Banff, but it's not just all snow. It's not just PEI and Anne of Green Gables. There are lots of opportunities in Canada. Describe some of them for us.
Well, actually, Canada has a fantastic mix of all the things that all the experiences that international travelers are looking for. We have great, cool, urban, diverse experiences. We have great outdoors product. We have spectacular skiing. We have great golf. So a lot of the key elements are here. The question is, how do we make it more accessible? How do we incent more competition in aviation, for example? We're more of a fly-to destination than a drive-to destination, as we were 10, 12 years ago. But there's huge opportunity. As I said, the world is traveling. The American market is starting to travel again. Their outbound numbers are up. A lower dollar, at least at the 10, 12 cent mark, is going to hold more Canadians to stay in Canada than it is going to incent others to travel here. But what's more promising for us, and we agree with the Governor of the Bank of Canada, that the reason that the American dollar is appreciating against the Canadian dollar is because their economy is turning around. We have great hopeful signs out of the U.S. market. Again, their outbound numbers are up. They've doubled the number of passport ownership in the U.S. over the last 10 years. So they're a great market, and we're going to be spending most of our time in partnership, we hope, with the federal government to really focus in on the American leisure market.
What's your favorite? I know there are lots of them, but can you boil it down to one of your favorite tourist destinations in Canada?
You can't ask me to pick out one spot, but I will say I did take my wife and daughters to Banff Lake Louise for March break, and we had a spectacular time. They've had great snow out there. The skiing was awesome. The whole scene was just fantastic. And frankly, I could replicate that same sort of series of experiences or fantastic experiences right across the country. So it's not for our lack of cool stuff to do, and it's not for our lack of competitive product. I think we just need to invest a little more strongly in how we're promoting Canada, especially to markets like the United States.
So when we think a lot about travel and tourism, we often just think of dollars and cents, but he put into perspective the additional income that could go into the coffers of Revenue Canada if we got up to that 5% level. It's over $80 million a year. That's just if we got up to the global average of growth. So, you know, it's an important part of the Canadian economy that we kind of push aside, and Anne of Green Gables, but there's a lot going on in this country tourism-wise. What's your hot spot to go in Canada?
Well, you talked about ski resorts there. I'm dating myself here. I used to go to Mont Tremblant quite a bit, do some work there. Grey Rocks as well. That's a while ago. What number one on my list is Prince Edward County. It's only 3 hours away. I still haven't been there. Here it's great. And there's lots of parts of the country I haven't seen. Out east, so many places I want to see. BC as well. So they're on my list.
I think the point about Canada is there isn't really that much to do. I mean, you walk around a lot of Canadian cities, they're pretty bland. You know, they've got a Hood Bay and they've got a Shoppers Drug Mart and boring office buildings.
He argues that they're cool urban hotspots.
I don't. Good luck with that. Pockets of Montreal, especially Montreal, maybe Toronto. I think the great attraction about Canada is its emptiness. What do I mean by that? You can go to a provincial park in Ontario, canoe camping. You're just in beauty for really not very much money, as long as you're willing to carry the canoe between two lakes. You never get that in Europe. And it's almost impossible in America as well.
You saved yourself there.
No, I think Canada has unique attractions, but we shouldn't just try to be emulating can't imitate Italy, can't imitate the buzz of London.
No, and you cannot imitate the Northern Lights. That's on my hot list, or my short lists of places to see. We will be right back. We are going to look at hockey. No, we're not. Is it Canada's most popular pastime? Maybe not. We have the answer after the break. Welcome back to ViewPoint. Well, most Canadians think hockey is our game. Mark, when it comes to the games we actually play, it's golf.
Lots of people play hockey, but a lot of people play golf as well. We're tired of this brutally and relentlessly cold winter. A lot of people are turning their thoughts to golf. Now, Golf Town is the largest chain of golf shops in Canada. We spoke with an executive, and he gave us a tour up on Laird in Toronto, and he told us about some of the latest trends.
The person that will do anything for golf deserves a store that will do anything for the golfer. And that's what Golf Town's all about. Well, we are the largest golf retailer in Canada, but about 19 months ago, we joined forces with Golfsmith in the United States and became Golfsmith International. Combined, we are the largest golf retailer in the world. Well, the golf business in Canada is roughly $1 billion at retail. There are roughly 6 million golfers throughout Canada, so high teen percentage of the population, which is in terms of participation double what it is in the United States. So more golfers per capita in Canada than there are in the United States. It's the #1 participation sport in Canada. Well, for me, I'm really looking for a new driver that is going to provide more forgiveness. If I can hit more fairways, I think my score will come down. I don't hit the ball a long ways, so it would be nice if I could find a driver that's going to give me increased distance as well as increased forgiveness. I'm focused on the mechanics of the swing. I pick a spot on the simulator, a target, and I'm trying to hit to that spot. I'm trying to keep it in the middle of the fairway and focusing on the mechanics. Slow backswing and follow through. Well, this is the latest technology from Callaway. This is the Big Bertha Alpha. And what this driver has that is unique is a gravity core. This one's $549. This would be probably the most expensive driver that we have in our stores right now. 2 weeks ago at the World Golf Championship at Doral, Patrick Reed, kind of a new, younger, up-and-coming PGA pro, beat the best field in golf with Tiger and Phil and Roy McIlroy and everybody else in the field. He beat him and he was using this driver. This is an Odyssey putter. They are the #1 putter company that's in the world today. This putter is $245. A great putter has all the latest technology that you're going to find in a putter. This putter has it. It has a toe and heel weighting to it. So what that means is that they've moved the weight for the putter out to the toe and to the heel and further back. That increases the moment of inertia. What you're trying to do with the putter is decrease the twisting in your hands. If I can keep that putter solid and steady, then I'll get straighter putts out of it. So what this putter also has is the new larger grip. You'll see this all over the PGA Tour. Players like Phil Mickelson are using this grip. What this grip also has is a counterbalance, so it's got a weight in the grip itself, and that promotes more of a pendulum swing is what you're looking for. You want to use your large muscles when you putt, and that keeps the ball going straight. When spring hits, we will see a big rush. People will jump on the golf course, and they'll come in here first to get new equipment.
Producer John Gray put that together, and Ron was really cracking those drives there. Very impressive. So who are the golfers here? You, Francis, Andy?
No, I'm not
No.
a golfer. I'm very familiar with golf because I am a bit of a golf widow, so I know a lot about it. I know a lot about the names. I thought that putter was really quite cool, and it goes to sort of the high-tech nature of golf. I mean, it's way beyond, you know, a little wooden stick and a little ball made of rubber bands.
It's come a long way.
The one thing that puts me off is arranging the tee time and traveling. I'm so late. I just instant gratification. I'd rather just run or bike or something, though. But I do believe golf is addictive. I believe it's so much fun when you get into it.
It is time consuming. I played a lot more when I was younger. Now I can't seem to find 5-hour chunks to block up to do it. But I've got some numbers here from going back to 2009. They're sort of dated numbers, but golf is such a huge game in Canada. Well over 340,000 people play it, $7.6 billion in household income, all sorts of billions in income taxes for the government, and it just continues to grow, especially demographically as people get older and they have more time to do it and they like it.
And I was interested, actually I have those numbers in front of me as well. We were talking about numbers with travel, but this is a big contributor to the bottom line of the country, and you don't think of it. Again, with travel, you think fun and games, but it's dollars and cents.
Dollars and cents. Unfortunately, we don't necessarily have the weather to play it year-round, except for, say, BC and certain parts of the country. But certainly, it's very popular.
Now, Ireland, I'm just going to bring Ireland into it at the end, Andy.
Covered in golf courses.
Yes.
And some of them are wild.
And you don't golf.
I never got round to it, but I mean, there are some beautiful courses, especially out west, and the holes on the edge of cliffs and stuff like that, through bogs, and it does look like fun. Pretty challenging, though.
And will you take it up when you're old and gray? Is that the idea?
Well, I played a lot when I was younger. I don't have the time so much now. Play maybe once a year. But yeah, I want to get back to it eventually because every time I'm out there, I love it.
And can I ask what your last score was?
Oh, geez. Lowest ever I shot was 83. That's going way back.
That's pretty good.
It's not 70.
But we will all golf once the spring comes.
Yes.
We are waiting for it. I know you are as well. That's it for our show, Viewpoint. Thanks so much for watching.